please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. 30 points higher is what the SGX Nifty is indicating, but once again, volumes would be low today. Asian markets are not trading once again. Girish Pai is with us from Nirmal Bank. Girish, good morning. Your thoughts first on PSU banks. PNB in particular, of course, but the rest of the banking pack. Do you think this weakness is a buying opportunity, or do you want to just, stay clear of all this mess right now?
Yeah, so until this event occurred, and probably even the other event that we need to talk about, is RBI's new regulations on how assets have to be, or bad assets have to be kind of disclosed and provisioned for. Before that, the feeling had been that the peak of provisioning was either behind you, or probably that would have been FY18 would have been the peak. But with the new regulations that have kind of come in, we're not too sure whether FY19 could be worse than FY18. So to that extent, I may be a little worried of the entire pack per se, but I would say within that, SBI is something that we like, because I think it's better placed from a capital adequacy standpoint. And I think from a GNPA perspective, I think it's a little better placed is the way I would look at it. But having said that, within the financial space, what we like are retail, consumer-focused banks. Though the valuations are fairly rich, we think that book value compounding is going to be fairly good there. And certain NBFCs like the gold finance space is something that we like. So within the financials, we would kind of still prefer overweight stance in private banks and certain NBFCs. PSU banks are more like a delta trade, depending on the kind of delta that these companies are going to provide from a profitability standpoint as provisioning keeps coming off.
Okay. Good morning, Girish. Well, as this 600-point fall came in the Nifty, what started to look attractive to you?
So we kind of look at a lot of mid-cap stocks in our brokerage house, and I think a lot of these mid-cap stocks have been very high-quality companies with very good return ratios and fairly good earnings compounding, and these were trading at very good multiples, I mean seriously high multiples. So the correction that we've seen in January and to an extent in February has actually made some of these stocks a little cheaper. So the same old stocks that we've liked, which we've kind of which we've had to push our target price, PE multiples higher, because they've been trading at fairly high PE multiples. Now these are available at slightly lower levels, and I would think these are attractive buys. So there are stocks in the consumer durable space, consumer electrical space that we like. There are stocks in the consumer durable space, consumer electrical space that we like. We like certain auto companies. We like certain consumer discretionary plays. So this is a fairly broad kind of outlook on what stocks to look at.
Okay. Well, I think the market opening rates have just come in. As Anuj was pointing out, we are going to see a little bit of a weak participation in terms of volume. But at the moment, it's very flat. Sensex starts with a green tick, but the Nifty is just dilly-dallying. We don't have much by way of... maybe you want to just pick up and see what the banks are doing, especially Bazaar National Bank, but then all banks. HDFC starting with a down tick, and so are Infosys. I don't know, it's not making much sense at this point in time. Z Entertainment starting higher. I think we shouldn't be reading these rates at all.
Gitanjali Gems is down another 20%. So that clearly is the one which is the weaker one. I mean, more than PNB, it's Gitanjali Gems which is.
I mean, logically,
down.
that should be the one that should lose more.
Yes. Okay, a couple of more non-index large caps that are looking good. Ashok Leyland once again well in the green. Voltas is picking up 3.5%. Jubilant Foods has had a dream run, so that stock too is up and about. Girish, hi, morning. I wanted to ask you about some of these stocks that have been hitting new highs, especially in the auto space. Ashok Leyland, Bharat Forge, Escorts, etc. Anything here that still could beckon more value?
Yeah, so within the auto space, we do like selective stocks. I think Hero Honda is something that we've kind of liked for a while. It's corrected a bit. I think the fact that we've seen motorcycle growth kind of pick up in FY18 after like a couple of years of fairly tepid growth, and the fact that the rural economy is kind of recovering and probably will show stronger growth going forward with probably higher MSPs. being delivered to farmers. I think it's fairly well placed there. So Hero Honda is something that we like. In the auto ancillary space, we like a company called Gabriel, which is also a derivative of two-wheeler growth. So it's kind of it's catering to the faster-growing OEMs like TVS. It's also catering to the passenger vehicle side also. So these are a couple of stocks that we like on the auto side.
Okay, the stock of the moment is Fortis. 10% higher is what we have on that, at least for starters. Now, you know, it's a bit of a gray area, but the point here, and we made this point in closing bell as well yesterday when the market was closing, is that, you know, maybe now you want to read this as the last precursor to a deal finally taking place. And the stock, of course, has fallen a lot. So, and there are a lot of people who believe that this, at current price, this is a buy. Of course, Mr. Ulsan has also been talking about that it's a screaming buy right now. So, that could be the one which is, you know, the factor which is playing part right now. The other stock which looks quite interesting right now is Religare, because that's also same group company. So that one also up about 5% right now. But Girish, you know, in terms of some of the stocks which have done well, IT has made a huge comeback, especially the mid-cap IT. Lots of stocks, you know, gaining traction. Do you have any picks there?
See, we've kind of been negative on IT for about 3 years, and we actually put the sector under review late December because we felt that, you know, the call was kind of going wrong and there were certain things changing in the environment. So it's still under review. We're kind of evaluating some of the macro parameters kind of driving growth and stock performance at this stage. So the way I look at it, the scenario seems to be that FY19 will be a tad better from a growth standpoint vis-a-vis FY18, and I'm talking about selective tier 1 stocks will probably show a little bit of a spike in revenue growth and probably earnings growth. The question to ask yourself is that priced in already? The second question to ask is whether this growth can continue into FY20. So that's we're doing a bit of research on that particular aspect, whether customers are kind of looking at spending a lot more than they were doing previously, whether the tax reforms that have been kind of you know, done in the US, that's going to lead to higher capex and a more sustained capex over a couple of years. So that's you know, that's an area that we're kind of focusing on in terms of research, and we'll putting out our view on the sector shortly. But looking at tier 2 companies, I would be a little worried. The stocks have run up quite a bit. I think it's been more driven by PE multiple expansion rather than any kind of material earnings growth pickup. I think the stocks are far more riskier. I think the growth is the client profile, I would think, is far more riskier. The de-risking aspect in terms of the client concentration is not there vis-a-vis tier 1 companies. So I would be a little worried about the tier 3, tier 2 companies, the mid-cap companies in the space. They've already run up quite a lot.
Okay. Well, just coming to you, Girish, I wanted to discuss that affordable housing theme. We heard something disturbing from Sudhin Choksi about 5 minutes back. But before that, Manisha Gupta has been waiting by, and there are important commodity cues today. Manisha, you already spoke to us about metals. What else is raging?
Well, everything actually in this asset class. The weakness in the US dollar, that one is trading since the lowest since the month of Jan. That is when it hit a 3-year lows as well. So with US dollar, you know, sliding further, we have seen strength come back in many asset classes. So crude oil prices have seen strength come back yet again. Apart from the fact that the weakness in US dollar has been supportive, there is a statement from Saudi Arabia saying that they are not looking to exit output cut strategy anywhere in 2018. That has been supportive. Also, an important number is the Indian imports for the month of Jan at a record of 4.9 million barrels per day. That, of course, is quite supportive. You've seen 13.5% of a jump in Indian imports year-on-year basis and 12.5% on month-on-month basis as well. And these are the numbers coming in from Asia that have been supportive for the crude oil prices. Another gain, of course, has been seen in case of the gold prices, 4% up in last 7 trading sessions because of the weakness in US dollar. So that really is the major theme playing across all commodities right now.
Okay, thanks a lot for that, Manisha. Well, we also have Chandan Taparia of Motilal Oswal Securities who joins in now to give us some views. By the way, Jet Airways, after that fall yesterday, is making an attempt to recover. This morning, it's up about 0.5% in pre-opening. Chandan, morning. What are the stocks that you would be recommending today?
Yeah, I would go for selective stocks because Nifty is holding the gains, but stock-specific volatility is clearly visible in the market. I recommend you to go on long on selective IT counter, and here I have selected to be with Infosys. The stock has formed a double bottom formation and finding some buying interest with put writing activity at 1100 strike. So expecting this stock to recover to us 1145. One can buy with a stop loss of 1099. It has also formed a positive price pattern on the daily, and on weekly it is forming the long leg doji after the weakness of 2 weeks. So that may support the stock to recover to us 1145. Second trade is from the metal, that is the Hindalco. The stock has taken a strong support near to 237 240 zone and formed a positive price pattern. We have seen built up of long followed by short covering, and the stock is holding well from the multiple bottom at the lower zone. So expecting this stock to rally to us 263. One can buy with a stop loss of 245. Option trader also can trade with 250 or the higher strike call. Third trade, that is on the sell side on the BHEL, the stock is forming the negative price pattern, finding hurdle near to its 50-day exponential moving average. Shorts are being built and fresh call writing is also restricting upside momentum. So expecting weakness in the counter, one can sell with a stop loss of 98.5, and the stock has potential to go down to us 90 to 89 levels.
Okay, Chandan, thanks a lot for those trading ideas. The pre-open rates have now settled 50 points higher on the Nifty at around 10,600, 100 points higher on the Sensex at 34,400, 100 higher on the mid-cap index as well, and about 90 higher on the bank Nifty. So 0.5% gains, 1/3 to 0.5% gains for most markets. Now, Ashwini, thoughts on the pre-opening rates? 90-point gap up on the bank Nifty, 50 higher on the Nifty. Is there a trade?
See, the idea is that if we are unable to cross 10,600, 620 or similar levels on bank Nifty, then chances are by the end of the day, you will lose all those gains. So the gap up is definitely not a buy. So you probably trade individual stocks and see where the market finds resistance, and then maybe the play will still be on the short side, because in the morning people who are long and who don't get follow through, they'll be forced to cover their positions.
Okay. Girish, we still have a little bit of time. I wanted to ask you, there was this big affordable housing argument, and people were buying housing finance companies, cement companies, home improvement companies. You still buy that theme?
See, the thing about affordable housing is that, typically this is, it's a metro phenomenon. It could even be a tier 2, tier 3 phenomenon. And the kind of people buying these affordable houses, whether they are actually salaried folk, the housing finance industry, in my opinion, is kind of, the whole foundation of that is based on salaried folk taking out loans, taking out mortgages, and being able to pay these mortgages over a long period of time. Now, the question is whether the customer base of these affordable finance companies, whether they have incomes which can sustain these kind of loans. That's a question which one needs to ask. Or whether we are back to, the US phenomenon of ninja loans, whether these are something akin to the ninja loans that were given out 10 years back in the US. So that's an area to worry about a bit. But otherwise, I think we were, from a financial standpoint, we are probably more interested in buying banks which have got a diversified portfolio, which has got housing, which has got corporate loans, which has got other retail loans, personal loans and stuff like that. We would be interested more in diversified loan books. So private consumer focused private banks, selective corporate banks, some private and some PSU, those are the kind of spaces that we would like to invest in with a 2 to 3 year time frame.
Okay, Ashwini, what's the 9-10 call?
I think at higher levels, Reliance Infra, you can sell with a stop of 448, target of 430.
Okay. Girish, I wanted your thoughts on Fortis Health. One more hurdle has been cleared for Fortis Health. We were just discussing the Supreme Court allows the sale of the pledge shares with the lenders. If this merger does take place with Manipal, as a lot of people are talking about, it could become India's largest healthcare services group. Are you optimistic here?
No, I really don't track the stock, so I have no opinion on it.
Okay. Finally, I wanted to ask you about IT. Is that on your radar now as a good buy?
So as I mentioned some time back, I think we are re-evaluating our position. We've been negative on the sector for about 3 years, and the call had worked out fairly well. over that particular time frame, except in the December quarter when things started looking up. So I think the issue there is one of relative valuations when the entire market, especially the better loved sectors like consumer staples and consumer discretionary, consumer durables, all are trading at 35, 40, 50 PE multiples. The institutional investors start looking at other areas where there is a lower growth but steadier growth and probably good return ratios. So I think IT kind of fit that criteria. Plus, I think the sector was underweight in most institutional investors' portfolios. So to that extent, the kicker that came from the tax reform, the fact that certain companies may go ahead and spend a little bit more in 2018 vis-a-vis 2017, probably provide that little bit of catalyst for the stocks to move. So I wouldn't get too excited at this point in time. The question is, how sustainable is this kind of spending growth one is going to see in 2018? Will that continue into 2019? Will the US economy continue to be strong in 2019? I'm not very clear about those kind of questions, whether there are proper answers to it at this point in time. So as I said, we've kind of put it under review. Probably in a few weeks' time, we'll have a new rating structure being put out on the IT sector.
Okay. Well, thank you very much for joining us with all those analysis, Girish. Okay, well, we are staring at a market that's looking very good at this point in time. But we do, as our technical experts have been pointing out, it's not very clear how much of this will hold on. Prakash, anything that's come into your radar now?
I think Bharat Financial, perhaps we could see an up move here. Very strong support in the vicinity of 1,010. Possible target on the downside, 1,050.
Okay. Ashwini, is there any trade in any of the individual banks?
See, I think today could be an IT day. So if you have to buy, try to get into IT. On PSU banks at higher levels, there could be still shorting opportunities.
Okay. Which IT stock in particular, Ashwini?
I think things like Tata Elxsi, NIT Tech, etc. They've had some correction, so mid cap IT could do well.
Okay, Prakash, I expected you all to speak about metals also as much. Is there any metal stock on your radar?
Vedanta could be going up, seen a good up move and is close in the upper regions. So very good chance that it can climb to around 332 to 337. When I look at Tata Steel, that doesn't give me that much confidence. But yes, Vedanta is looking good to me.
Okay, a quick word on Leyland, Prakash?
Ashok Leyland, I've been liking it. I feel that it can climb to levels closer to 150 zone. It's a matter of time. Seen a good up move as well. But I think, yes, it's going up here. Very strong support in the vicinity of 1997. So Ashok Leyland, I like it. It's a matter of time.